is smoke and mirrors. So we want to make sure that you guys get the quality content, and that's what we do here at the Profit Room. Who is absolutely new to trading? Just press one. Give a number one if you're new to trading. If this is new to you. And don't be shy about it or whatever. Okay, one. Like, because we're able to cater more to the atmosphere. Yes, yes. So if you're new to trading, just put number one in there, because we're going to start from the basics and we're going to get to advanced trading, because we have some people here that advance. So one, that's good. One, we're glad to have newbies like that. One. So if you're new to trading, yes, just hit one. And that's great because we have this concept that could definitely help you out, get you on the fast track to trading in the markets. Number one. Cool. So if you're new to trading, hit number one. Now, we got a lot of ones, which is great. If you are experienced with trading, like if you're experienced, just put like a number five to say that you're experienced with trading. Number five. See who's on there for number five. If you have any experience, okay? We know you, Naresh. Experience in trading, yep. Omar, we know. It's cool. So we got some experienced traders in here. Good. That's good. That's good. And that's what we're gonna talk to some experienced traders later on with some advice that can help you as you experience trading. 2.5. I understand that. Now, experienced trader. We're not talking about no Robin Hood. All right, we're not talking no one share per trade. So, but I understand that, and I think you guys are gonna have a good time. Like, once again, we're gonna bring this start in a couple of minutes. So the people who are going to be on here today will be myself, Ernest. I'm one of the team members here at the Profit Room. Also, Jason, he'll chime in. Jason, with my role in the Profit Room, most people see my face majority of the time. I'm just a regular team member. I try to do a lot of the education with Latoya and I. She'll be on, and we put together events like this for people to try to understand the stock market. So when you do decide to purchase one-on-one mentoring or any of our programs, it'll be Latoya and I handling most of that. Jason, he's one of our futures in Forex specialists, moderators. His experience is diversified, like between options and the markets, period. So he'll be able to help assist towards the end with some questions with that. We have a few slides on Forex and futures just to give you a little insight on the market. So we'll be able to start in a few. And one other question, does anybody have ever taken or have been to another webinar before? Stock market webinar. I've been a part of it. It doesn't matter, I mean, many of us do research, things like that. Has anybody, okay, you have, of course, Omar, he's bad. No, Travis, okay, good. No, good. Good. So now you get something to compare it to. You shouldn't have to go to any place else. We're going to give you some tools, information can get you running and be able to see it for yourself. Yes.
Hello, everyone. Welcome.
Oh, what's going on, Latoya?
How's it going?
It's going good. We ready to start this webinar. We got some people in here. I know some will be trailing in a little bit later, but we have this recorded, so we should be able to share this recording as well. So first of all, as we move forward into this webinar, we look forward to explaining some basics and how to get a lot of people started. I'm noticing on here there's a lot of newbies, and this world of stock market can be very scary, and that's why we came out with the keys to stock market success. So Latoya, please let the individuals know why they should know about the stock market.
All right, so welcome everyone. First of all, I know Ernest already went through the welcoming part, but welcome to the Profit Room's webinar. So we're actually happy to have everyone here. Still waiting for more people to trickle in because we did get a lot of participants to sign up for this webinar. So we're going to discuss and go through the keys of stock market success and hopefully open your eyes to the wonderful opportunities as well, the profits, the income that this market can provide with just the fingertips of, your finger basically is all right here. So where are we going to go from here? Why should people invest in general in the stock market?
Yep. So before we even go into that, right? Like Latoya said, just at your fingertips. The reason why the Profit Room is coming to be, I'm glad you guys came here because we are traders. Now, there's a difference between when you see social media traders out there and people online, which we are online, but active traders. So this is what we do for a living. We provide for our families, we pay our bills, things of that nature. And Latoya and I traded for years together, side by side, and we decided to create this group called the Profit Room. And we started networking and getting other professional traders, like you'll see Jason and as many others on our team, to present information for individuals to learn more about it. Because even though you see so much stuff on TV, it's easy to teach. That's like, we like to give the example of having a personal trainer that's not in shape. They have the knowledge, but they can't actually keep up or maintain that physique. It's just a little example with that. So that's the same thing with trading. There's a lot of people that teach, but they don't actively trade anymore. They know the knowledge and things of that nature. So this is what we decided to do. And we're going to go even further on into this. But before we do so, of course, we always got to have a legal disclaimer. So the Profit Room LLC, we are a company, so the information that we give is basically educational purposes only. So as you see here, whether professional advice or investment advice or otherwise, it should only be assumed that the models and the techniques taught by the Profit Room will be profitable and that they will not result in losses. So you see I'm paraphrasing it because all the information you see here is educational. So we're not actively in a trade or trading right now. This is just basic information. So why trade or invest in the stock market? I'm going to start this off. We're going to give a nice analogy, then we'll turn it over to Latoya to explain a little bit more. So the stock market is like a form of transportation. So just sit back and think about it. We know about a bus, vans, or cars. So many of us use that every single day, some form of transportation. So we use that. The purpose is to get to a certain destination. That's why we use it. So we either could be the driver or we can be a passenger in all these vehicles. So, but many nowadays, they choose to be the passenger. Even though you may like to drive, right? You got Uber, you got Lyft, you got Think. Who doesn't want to be in a limousine, right? You want to sit back and chill. So, but in the stock market, it's the same exact thing. But we're here to show you how you can take control and be the driver. Now, being that driver, there's many vehicles that you can actually drive. And we're going to start off with one of the vehicles being a caravan. So you see the old school caravan, right, in this picture. But also you could think of the minivan. So what you look at a caravan, just picture it. You think of comfort, you think of size, you think of long road trips, right? You're relaxed. And you really don't have too much concern because, listen, you're not in a rush to get to where you need to get to at that particular time. That's the same thing when you think about swing trading short term. It's the caravan of financial vehicles. it's almost one of the safest ways possible to be an active driver in the stock market. And we're going to talk about that a little bit more when we go into the next slide. So when we look at that swing trading short term, Latoya, what are some of the aspects that we could look into of swing trading short term?
Well, swing trading short term, you can look at the length of time. Many do it for the income because such a small length of time. So the length of time with short term swing trading, we're speaking, it can last from 2 to 6 days, or swing trades can generally last 2 weeks to 4 weeks, or sometimes 6 weeks, depending on the analysis that goes into that particular trade. Now, the purpose of swing trading really is for those, let's say, they cannot actively be in front of a computer to day trade, let's say, or constantly look at the markets. So therefore, you will do analysis based on, let's use Apple, for example, a stock, and you have a particular price and you can foresee it within 2 to 3 days or maybe a week that it can get to a particular price level. So if that's the case, you can basically benefit by not being in front of the computer and until that hits your price target, and get out the trade once that price target is hit. So it's good for those who work or who are in school and don't have that time to dedicate to sit in front of the computer every day. So another good thing about it is the income, the short-term income, or it could be supplement income, and that potential growth within a small period of time. You can control your risk. So as in, let's say we'll use Apple once again for that example. If you only want to risk $100, you can make your risk to reward basically. You're willing to lose $100, and let's say you foresee Apple going up $3 a share. So in that case, you're risking 100 in order to make $300. So that's a risk to reward of 1 to 3. Now, when you think of swing trading and how much money you may need, it really depends. Personally, I would say with swing trading, you could start off with between $2,000 to maybe $7,000 to get your feet wet in the market, because it also depends on the type of or the price of stock, because stocks are different prices as we can see. So it really depends on the price of the security, will determine what you can actually purchase using either a small account or a larger account. And besides stocks, as we're going to get into a little bit later, you can also swing trade futures or swing trade Forex as well. So with this, we're going to give you an example of swing trading. So this is actually a video example. Go ahead, Ernest.
So this is going to be a little video example. You're going to hear at the Profit Room, we have a swing trading alert service, very affordable. And what we do is we send out weekly swing trade alerts where we give a technical aspect of a trade, which we'll go into that a little bit later. But this is just an example of how with a certain amount of capital you can use, which you can anticipate what you can receive from getting involved with a swing trade. So we'll let the video play real quick, then Latoya will go over the trade. So This is Weight Watchers. I'm gonna pause the video, then we're gonna go a little bit further so you can see. We alerted Weight Watchers, right, at a specific price because we liked a certain pattern, and that's a little more advanced, and we'll talk about that a little bit later. So we like the 1230 price, and it's a smaller price stock, right? And we'll go into the risk reward in a second. But the aspect of it is here we are looking at February 3rd. If you look at the top left of the chart, February 3rd, 2017. Now, you look in March, within the month, even though it did gap up to a certain price, this can be a way of you generating income without watching a trade. And Latoya, when we go a little bit further, we'll just see what Weight Watchers eventually did down the line. You want to explain that?
Sure. So we'll get a little bit into risk as I explain this trade. I mean, a lot of people that are new, you're probably looking at the screen like, what am I looking at? But basically, this is just a chart with Weight Watchers. You see the symbol WTW. So it's a stock. And when you're familiar with the market, you'll eventually know what, the red and white candlesticks you see on the screen, what they are. So basically, this is a price point around $12 this stock was. So just to give you an idea so it can really stick in. So Weight Watchers was once $12, 12 bucks. So let's say you want just 100 shares. That's about $1,200 in capital. So $1,200 just saying, hey, I want to buy Weight Watchers, because prior you heard all, the good news, Oprah and Weight Watchers. So, some people like Oprah. Let's see if we can invest along with her. So you purchased 100 shares. Now you got to think of what you're willing to risk. Now, concept is you're only willing to risk 100 bucks. So as in, if Weight Watchers went to $11, you're going to say, hey, I no longer want the stock because it reached $11, therefore you lost $100 because the price was 12, you bought it at 12 and went to 11, so you lost $1 per share. So in this example, you lost 100 bucks. Now, as you can see from this chart, Weight Watchers never got back to $11 from the $12 purchase price. So you're sitting there, then you realize the stock started to move higher. You're getting real exciting because it's like, oh, this is great. Now, in the prior, if we backed up the video a little bit, you'll see where in 4 weeks, Weight Watchers went to $19. Now, 19 minus 12, that's $7, meaning you made $7 per share. In this example, you only had 100 shares, so 7 times 100, you made 700 bucks in 4 weeks' time, just investing $1,200 in capital. Now, I love that return. I don't know about you, Ernest, but willing to risk $100 to make 700, and it only took 4 weeks. Now that's considered your risk to reward. And a lot of people, when they enter or start learning about the market, they don't really know how to evaluate risk. And the most important part is to evaluate risk. Now, as you can see a little bit further, Weight Watchers became a $42 stock within August. So that's even a couple of months longer, right? Just sitting there, your $1,200 capital that you invested, now that is what, $42.
Yes. So we'll talk a little bit more with this as long-term swing trading, but this is the concept. Whereas a short-term income trader, you would take that $700, right? You would take that money. Now, this is a big home run, but when we're going to go into the next slide, just keep in mind what you see here with the Weight Watchers, right? Imagine, I'm touching base a little bit early on it. Imagine this is your 401k or your Roth, or your IRA account where you have the power of controlling what you purchase based off of analysis that you can learn. So we're going to go into the next slide and see a little bit more about what we was just mentioning there. So like Latoya mentioned, where you can make money in the stock market, swing trading, is knowing your risk to reward. And that's where people get afraid of when they say, I lost so much money in the stock market. The stock market is a gamble, because people don't get educated. And that's why you guys are here to get educated. So I'm giving another simple example, just like the Weight Watchers. There's different ratios you can look at. So you see here on the screen, you have an entry where you purchase, you have an anticipated profit that you want, and you have an anticipated loss, not anticipated, which you're willing to lose. So let's do the math. Say there's a stock for $10, right? $10, and you buy 100 shares. Let's look at the simplicity behind this. You're willing to let that stock go to $9.50, right? Your price target is $11.50, right? So if it reaches your price, you make $150. If it hits your stop loss, now a stop loss is when you place an order in the stock market, right? You want to buy at $10. You have the choice at that time to tell the broker, E-Trade, TD Ameritrade, listen, if that stock goes to $9.50, sell it. You have the right to do that, which people don't understand that. You don't buy a stock and just let it go. You know, you control it, and you have a right to tell them when it reaches $11.50 to sell it. It's a combination order, and we teach and go into all of that in other programs. But let's go a little bit further. Now you're in a 3-to-1 risk ratio. So give yourself an example. Say you have an account with $5,000 in it, right? You can do at least 3 of these trades a week. If you lose in all 3, you only lost $150, right? But the likelihood, if you get educated and you understand, you may lose on maybe 2 or 1, but imagine if you lost on 2, right? You lost on 2, that's $100. But you just gained on 1, that's $150. If you do a 3-to-1 ratio. So you're still up $50 for that week. But imagine if you gained on 2 of them, right? That's $300. So that's how real trading is done. It's done systematically with a risk to reward ratio. So we're going to go a little bit further and just touch a small base on it. When you saw the candles, right, we had technicals. Those are technical price movements. What Latoya mentioned about the red and the green, the red and the white. So technicals is based off of charts. We primarily do that in the market. Then there's also fundamentals, just to give you a little base behind it. So fundamental trading is a lot of people use the P ratio. They look at the earnings. They look at economic activity. They look at the overall company. Technicals, which we primarily do and we teach and encourage, we look at what the market actually tells you. Those candles is like reading sheet music. If you play an instrument, it's telling you or anticipating the next note. It's telling you how the market is moving and what the people are actually saying, what moves the market, like supply and demand. And we'll touch base on that a little bit more. But we just want to give you just a little snippet about it. And you got any questions towards the end, you can ask about that. One slide here with Latoya mentioned, and you could touch base. What are different trends in the market, Latoya? Just real quick.
Well, there's really 2 trends only. So you're either in an uptrend where price is continuously going up, and I know a lot of you are familiar with, the recent economy, I should say, just to draw an analogy. So if you remember when, the real estate market as well as the stock market, everything hit like pretty much rock bottom. Everyone felt depressed, and then we had years of an incline basically. So we're in an uptrend because we have yet to see those declines. So everything is just constantly in an uptrend. Then you have a downtrend where everything just falls and constantly goes down. And then there's some point of time where if you could just point to DLTR towards the right, where you have just everything is range bound. So it's basically you're sideways. So things either move up, down, or you have your stagnation where it's just sideways.
Yes. So even though, like Latoya mentioned earlier, it may seem like, what am I actually looking at? It's just the concept that the market, HH means higher highs, HL is higher lows. So these are weekly charts. See the word weekly. Weekly. As a swing trader, when you learn how to read these charts, just giving you an example, you see that it's going up. This is on a shorter time frame. Latoya mentioned a longer time frame, the economy, we're moving up. So when you see a particular pattern like this or price action, you may think about investing because it's in an uptrend, right? When you see something going down, is going in a downtrend, that means that the sellers are coming in, they're not less interested. Now, this has nothing to do with fundamentals at all. Has nothing to do with fundamentals. This what we call all technicals, and this is where Latoya mentioned chop. When you get chopped up, sideways market is so much indecision, where you may choose as a swing trader not to invest in the market at this particular time because you don't know a clear direction of the market. So as we move forward, we talked about short-term swing trading. Now we're going to go into long-term swing trading. And many people, another vehicle is like the bus. So think about the bus. The analogy of a bus is public transportation. It's a service where you can trust the driver most of the time, right? To get to your destination where you want to get to. So you just tell your driver the destination, hop on the bus and let's get here, right? Let's get to this destination and sit back and wait to get there. So swing trading long term, right? Long term, Latoya get into that length in a second, is the concept of the bus. You sit back, groups of people are on this bus and you're a part of it, but there's a way you can be involved. You could be that bus driver in swing trading. And Latoya talk a little bit about that, but just remember the slides of Weight Watchers and remember the slide of the risk to reward ratio. This all includes the same thing, but on a longer time frame.
So with the length of time now, long term. So this is good if you control your own Roth or retirement accounts in general. So with that Weight Watchers example, you've seen where from $12 and by the time August hit, that's what, about 7 months, that stock was $42. Now that is huge. So that length of time was generally about 7 months. So 7 months, 6 months to about a year, or even longer, 2 years, 3 years, that's considered long term. And the growth with that is substantial, especially being on the right side of anything you may invest in. I know a lot of people like to talk about Google and Apple. If you were around this year, you'll be a millionaire by now just holding on to those securities. Generally, it's extremely true. Same thing with like Tesla, for example. So with retirement accounts and the risk associated with long-term swing trading is a bit different than short-term because now you have more time on your side per se. So you're willing to allow the movements to fluctuate just a little bit more as long it continues in that trend you've seen with the previous slide. As long as it produces higher lows and higher highs, that will be your uptrend. Now, for retirement accounts, we have portfolio managers that manage those accounts. So basically, retirement accounts, everyone is a participant. If you have a job, you participate in your company's retirement program, or let's say you work for yourself and you have your own Roth and you do it yourself as well. So those are ways to actively participate via mutual funds. So you can do mutual funds in those accounts, and that's a good way to get into long-term investing. So the money you need is really determined by how much you feel you need or how much you're willing to use to dedicate to long-term swing trading.
So when you look at long-term swing trading too, which is great, it's the same exact thing like Latoya was just bringing out. Same exact thing. The beauty behind it is you're going to have a longer time. So we gave that analogy of risking $9.50 on a $10 stock, right, to get $1.50. This time, if you don't need the money for income, you do it for growth. You do it for growth. So now you're risking, right now you're risking $3 to make like $12 moves, you know, and you can be even more advanced. What we teach too is a way of maintaining the gains. So there's something called trailing stops. We teach that in other courses as well. So if you did get a stock like Weight Watchers for $12 and it jumped up to $15, it doesn't mean you need to sell at 15. You can put your, remember the analogy, maybe you had a $11 stop loss, you're willing to risk 100. If it went to 15, you can move your stop loss now to 14. So you can lock in those gains, and that's what you can do long term. So say it goes to 20, you can move your stop loss to 16, right? And continue to continue. And this is the power you have in those different retirements accounts. So that's the beauty behind learning how to do it. And I know in some of the chat panes, somebody mentioned about stop losses and things of that nature. And that's what we find a lot of people don't know about, that stop loss. You can always get back into a trade. So we're going to move further into the sports car trading. Now, many people, when you think about a sports car, right, you think about fast, you know, excitement, fun, right? You may be weaving in and out of traffic and trying to get to your destination as fast as possible. You're not relaxed. Many people can't because there's so much performance you have. You have so much power, right, when you're moving and speed, and you need to be focused. So day trading is the sports car behind the financial markets. And many people see that and they get excited to it, right? But you just learned ahead of time, you could be in a caravan, you could be in a bus and still make money. So many people start off swing trading and swing trading. And that's what we actually recommend sometimes to learn the markets. But day trading is very, very fast and it can produce a lot, but it takes more mental capacity behind it. So Latoya, talk a little bit more about day trading. What do you notice by being a full-time day trader, doing this for a living, in the same aspects, the same questions from swing trading?
Day trading is a little bit different in itself. That's a whole totally different monster. So just think about a day in general, just when, you have something planned and you feel like you have enough time to actually do everything before you actually get to that something planned. And by the time you look around, you're like, wow, where'd the time go? It just goes.
Mm-hmm.
So that's pretty much the same concept with day trading. Just when you think you have enough time, you really don't. The market moves during the day. So the whole concept is to take profits within minutes to an hour, but generally, day traders, we're out the market before that day ends. So the market opens 9:30 a.m. Eastern time and it closes 4 p.m. Eastern time. So 4 p.m. day traders, they don't have anything in terms of positions. All they have at the end of the day is their cash accounts. So that's the general concept behind day trading within the stock market. So how much do you need in order to day trade? Well, we live in the United States and the markets are regulated. So they have a rule where it's standard is a must. You need $25,000 in capital in order to day trade. Now, I know there are a lot of offshore brokers that do not follow the US day trading regulations. So, therefore, if you have less capital and you still want to participate and you feel comfortable and trustworthy enough to hold your money in an offshore broker account, that's your workaround in order to day trade. Now, the risk is generally a little bit higher because you don't have time in your favor like swing trading. But at the same time, you still have control over how much you're willing to lose for the day. So it's the same concept in terms of your risk with swing trading. So let's say in day trading, you're only willing to lose $100. You control that. You can only lose $100 with your appropriate, once again, stop loss, as Ernest discussed. So there is a stop loss and there is, profit taking within day trading. So the functionality is pretty much the same. So we'll go to example of day trading profits. And this is this is another live video we have here. Um, so what we like to do generally is when we're in the market, no matter the day, we'll hit that record button and we'll record the trades that we took for the day. So this is example, and we're actually going to show you the profit and loss opportunities that come from day trading. Ernest will discuss this trade in regards to how fast, because you can see the negative on there, how fast you can lose money in the trade at the same time as how fast you can gain it.
So when you look at this trade, and back it up just a little bit, like we mentioned before, as technical traders, you trade based off of candles. Now, all these candles, the green, of course, is positive going up and the red is going down. And this is the risk with day trading where you need capital and you almost have to desensitize yourself from the monetary at the particular second, the monetary value, the money, and trust in your trade, like we say, or trust in your analysis. So if you look at this trade at AKTX, I'm just going to pause it for a second. It's been fluctuating between $10 and $10.50. And as advanced traders, you can almost anticipate a move going higher and you can anticipate a move going lower. That's considered chart patterns and things of that nature. We go into that with a lot of our courses as well. But just to show you how fast you can be down $120 and how fast you can be up, depending on your share size. So, and we'll talk about that a little bit more with our advanced traders towards the end. All welcome to stay, show how you can deal with that. So as we get into the stock, we're anticipating a push higher. That's what the green button, that means that we bought the stock, right? We bought, it's a cheaper price stock for a day trader, so he's able to buy and capitalize. Now, if you look at the price action, we sold it real fast. Now, that's almost like in a blink in the eye. I'm going to slow this down for you. this is like in a blink of an eye where the monetary value you can make from learning how to day trade. So we was able to get in, as you see, we bought AKTX at 10.25, $10.25, and it went up. We was able to see the top of the tail, the top of what you see right here. This is our target price, because you see it always rejects and comes back down. Now, as soon as we sold it, look at that. It came right back down. It came right back down. So that's the idea behind fast-paced moving, what Latoya was mentioned earlier. We did make some amazing profits, over $1,000 within less than 2 minutes, if that, or that's probably a minute. Can you receive gains like this all the time? Not every single time, but as you see during the day, this is in our trading room that we have, we was able to capitalize on a lot of different moves that day, where what happens is you catch the moves, but at the same time, you minimize the risk. So we have a predetermined stop loss to get out this trade too, if this thing went against us. So let's look at another video as it continues to trade, as it continues to play. This is a more controlled trade. This is called shorting. When you anticipate the stock is going in a negative direction, you can still capitalize off of the stock going down. And a lot of people don't understand that aspect. So the red dots means I'm shorting. That means I'm anticipating the stock to go lower. So just think of the same aspect of you thinking the stock going higher and you capitalizing on the profits going higher. You can capitalize on the profits going lower. It's just vice versa. And many people don't know about that as well. The concept is that everybody thinks stocks always go up, they go up, they go up, they go up. But remember in that slide, we saw stocks going down, and you can learn how to do that. So this is advanced technique. As you see on the red dots, we are shorting the stock, anticipating the stock is going to go down. The green, that's when we exit the trade. That's when we take our money. Now, being a day trader, we don't stay in the trade that long, right? I end up getting back in the trade. Our team got back in the trade later on and capitalized off of the movement. So it's short term. So short term, off of that one trade, what do we see here? We was able to capitalize a little over $2,200 in just that one trade. So learning how to day trade can be very, very profitable, but it does take training and experience. Like Latoya and I have been doing this for years, along as Jason, and this is what we show people how to do. So this is another example. This is American Airlines. This is AAL. Many people know that. News about maybe oil prices increasing, gas prices, they gap the stock down. This is another example where we're anticipating the stock to go even lower and capitalize on the stock going lower. So like we mentioned before, this is UAL, this is United Airlines. Believe this day, I remember Latoya and I, we got in both the airlines at the same time because it was news hitting that oil was increasing. So we're capitalizing off of that as day traders because we know that they have to buy jet fuel and oil, and that's what we end up doing. We capitalize off the movement. And this is one thing too, you can't always predict what is going to happen. So let me pause this. American Airlines that day, we was able to make $917. And United Airlines was able to make $424. But this is what you can learn how to do from the comfort of your own home. It's nothing special. It's just like learning an instrument. It's just like learning how a new language, and we learn how to read it. One last example, this is NVDA. Many people know about it. We shorted the stock earlier during the day, and now we was able to buy it. So we was able to buy the stock at the bottom, and it went higher, and we closed out the day. So all our videos are on our YouTube channel. If you like to see things like this just for entertainment purposes, you can see that as well.
So Shola asks, generally on average, how many trades do we do per day? The key when you're day trading, you really don't want to do any more than 3 trades per day. And the reason for that is all about probabilities. The more trades you do within a day, more than likely you're going to start losing on those trades. And that's just the way it works in general. So it's like you capitalize off of one, you still have the trading bug. You do another trade, make more money. All right, maybe one more, but generally that 4th trade, you're going to give back to the market. And as a day trader, you don't want to give back anything to the market. You want to make your money, close down your computer, and then walk away.
Yes. And when we talk, Jason will talk a little bit later, we go into some futures and Forex as well. That's the same exact concept. We run a live day trading room, and purposely we end it by 12:30 because we know as traders, the probabilities we should be able to capitalize off of at least 3 trades. And that's when it goes into mindset, psychology. That's when you really start to gamble, when the markets get a little choppy. So you start minimizing, you start lowering the risk after that. And we'll talk about that with our advanced traders as well. So just a little summary before we continue on a little bit. We just talking about the swing trading versus the day trading, right? This is just a summary we mentioned before. Minimal time commitment, larger profits when you're able to swing trade, lower stress alternative to the fast-paced trading associated with day trading, reduced number of trades to increase your wealth. So you can sit, you can have that account grow, you can make massive amount of money, right? Without going through the headaches sometimes of day trading. You see a lot of those trades, they go in our favor. But when they start to dip, we have no choice but to exit out. We have to exit out the position because we don't want to be negative $400,000. You get what I'm saying? We have to anticipate those movements, and that comes with just years of experience. So even though day trading, you don't have an overnight risk, you're able to capitalize on the smaller moves. But with the smaller moves, you need more capital. So some of those moves, we are only getting 50 cents in those moves, but you got to do the math. If we're getting 50 cents, we're in 1,000 shares. We're in 2,000 shares. It requires more capital. Whereas you can have less capital and swing trading and hold for a longer move and be able to, ride that trend. Also, smaller stop losses with day trading. So even though we're anticipating 50, 60 cent moves, we have to time it right. Because if the thing goes against us 20, 30 cents and we're in 1,000 shares, that's $300, so you have to look at it that way as well. So I don't know if Jason, if you're on the mic, can you pop up on the mic for a second?
Yes, I'm here.
All right, so Jason's one of our futures traders in Forex, and I just got 2 slides, one about the futures market. Can you just explain, just give a little overview about futures from your experience and just the market just in general?
Sure. I think one of the best ways to understand what futures are, or is more so kind of like the necessities that people need, or the basic things that people need around the world, as far as wheats, grains, metals, oil. There are now some exchanges on there that you can do. What I mean by the exchanges, kind of like the euro dollar, Japanese yen, things of that nature, or mainly those are things that are as which you'll find in futures. I think one of the biggest advantages of futures over equities is the amount of money required to place into a trade. sometimes where you have equities or stocks that are priced at, $40 and $50 a share, and for you to be able to, I guess, buy an amount of shares or a certain block of shares to try and see a decent profit, you can probably buy one or two contracts of futures and still, try to make significant gains. I think that's pretty much in a nutshell how to describe futures market and different in equities markets. I think in the end, trading pretty much is the same as far as it will take time to study your markets. It will also take time to understand what support and resistance looks like. However, you'll find that those things do pretty much move around in the same type of market or in the same type of price structure.
Yes. So we're going to go into Forex in a second. One thing like Jason had highlighted, which is good, when you trade futures, that's a next level, and the margin requirements are much cheaper. You only need about maybe $4,000 or $5,000, but at the same time, it takes any type of skill to develop. Like he mentioned, knowing the technicals, like Jason and the rest of the team, they're up to date with more economic events that's going on, elections that's happening around the world, and we'll go into Forex with that in a second. And being up to date with, like he said, the euro dollar is very lucrative with futures and very advanced. And you want to be around people who study futures, because futures market opens up at Sunday night,
6 p.m.
6 p.m. You could trade futures throughout the night. Like Jason and the team, even though our room isn't open, sometimes they're up 2 in the morning for the different sessions. Can you explain a little bit about that, then go into some Forex, Jason?
Sure. Pretty much with the futures market, as Toya said, it starts at 6 p.m. on Sunday and ends at 5 p.m. on Friday. Not all of the futures contracts are open around the clock like that, but the majority of them are. What we come to find is that at certain times during the night, maybe when London opens around 3 o'clock in the morning, you'll tend to find some good moves that we choose to capitalize on. Some of those we call in Slack. I know that sometimes y'all follow my IG page. I tend to post general directions of some of the commodities or some of the futures that I follow through the night. And most of the times you'll see that a lot of those trades tend to finish their moves during that time before they retrace. Pretty much those two, I guess, futures and the Forex, as I transition to Forex, they traded during that same time. So the Forex market opens at 5 p.m. on Sunday and trades until 4 p.m. on a Friday. Now, the Forex market, or also known as the foreign exchange, is the place where currencies are traded. And currencies, again, are the most important people around the world, because I think the best way to look at this is kind of like sometimes when people travel and they have to exchange their money. And say if you're going to Europe, you understand that the dollar, you need more dollars to buy less euros to be able to spend those euros in London. However, when you go to cash those back in before you leave and you say, hey, I want to exchange the rest of my euros back in for dollars, you'll find that you end up giving them less euros, but you'll get back more dollars in return. And the way these rates these currency exchange rates are placed against each other, is pretty much what determines how those markets tend to move up and down. And so sometimes you hear that if you're watching financial shows or things like that, you hear that the yen is strong and the US dollar is weak. But if you look at that chart, then you'll understand that it's labeled USD/JPY. Then that means that chart is going down because the yen is what is moving the charts down while the dollar is in the front, and so therefore it follows the yen price down. Vice versa, if you hear that they say that the yen is strong and the U.S. dollar is weak, if the U.S. dollar is strong and the yen is weak, then in reverse, the chart tends to go in the opposite direction, where the USD now leads the charge and it pulls up while the USD yen tends to follow. There are certain things that can trigger those trigger those certain information that can be used to trigger those charts sometimes, which is where the fundamental analysis tends to come in. I know you've heard a lot of war talk from time to time, or something that Donald Trump has said, or something that the gentleman from North Korea has said, and it makes the prices move accordingly.
Yeah, and that's the thing. I know a lot of people, you hear the term Forex because it's a low margin requirement, and a lot of people jump into that, and those are good markets, especially futures. But no matter what, you have to know what you're doing. Like you see and you hear from Jason, knowing the times of the days and things of that nature. That's just another aspect of trading that you can do, and we can definitely assist you with that. So we thank you for that, Jason. And somebody got some questions, we'll do that later on. So how do you start trading or investing in the stock market or futures? So this is just something you could look at, like the whole analogy we mentioned before. Many of us drive a vehicle, most like you was taught how to drive, or you took some type of driver's training, right? So the reason why you did that, because you didn't want to seriously hurt yourself or hurt somebody else. And that's what can actually happen if you don't know how to operate a vehicle. The financial markets is a vehicle. No matter what they say or what they show you online, it's not easy. It takes time. It takes education in order to do that. So those who are well informed and trained are probably usually the safest drivers, or those who can trade the best. In that sense, we all were taught or trained some type of way, because the market will humble you. Just like everybody may mention, they get a car, you get a starter car, right? What happens? You get dents and all that stuff in there. You maybe get in an accident. You start off with a brand new car with no experience. You crash it or something, it kills your dreams, right? It kills your dreams. So that's the same thing with the stock market. That's one way you can start. And best way you can start is by getting education and learning. Many people read books, but more importantly, you want mentorship. So Toya, what are some of these places they can go to start? Like, how can they start trading and invest in the stock market? What we see listed here.
So there are plenty of books that are great. So books are a great way to start off with. Besides books, is the actual process of opening a broker account. You could do it with as little as probably $500. Used to have Scottrade, but Scottrade is now TD Ameritrade. They got bought out. You have Fidelity, you have E-Trade. Those are the more well-known broker firms, and there's other ones out there. You can also look up information such as on Yahoo Finance. You can start typing in like Apple, Google, just start to get familiar with reading about the financial markets through that website, or Finviz, or bar charts as well. One of the most important things I'll suggest is definitely like you need somebody to hold your hand and guide you and mentor you. So if you have a $5,000 account, you don't blow up that $5,000 account because you have no clue on what you're doing. You're just doing it by trial and error. So it's best to work with someone that already been there, done that. So therefore, you can prevent those costly mistakes. So there's also different trading method. And as you can see, we went through swing trading short term. We went through long-term trading. We did stocks, we did futures, we did Forex. So it's really learning about those markets and then determining what will suit you as a person. So there's plenty of people that love what they do as a career. They could be a doctor, but they have an interest in the stock market and they say, hey, I want to still trade, but I love being a doctor. So I'm not quitting my job. no problem. They will fit right into short-term swing trading, so they can get their little fix in as well. So you got to really see what benefits you based on what your lifestyle, what you like to do generally.
Yeah. And that's the thing of beauty behind trading. We just trade full time because this is our job. This is what we do. This is how we make money. But like Latoya said, you can have a profession and sit back home and, you know, analyze charts like we just showed you how to look at and decide to place a trade. Or you can go on at night with Jason and the team when they had the futures room open and trade futures, something of that nature. Or we like a lot of people in our day trading room, they have other professions and careers. So you learn about the stock market doesn't mean that you have to be in the stock market, period. It doesn't mean that you need to be in the stock market, but this is some great ways to start. TD Ameritrade, and we have some more news about that a little bit later on, is a great platform for beginners. Yahoo Finance, Finviz, bar charts. This will give you an idea of what's moving in the markets, and also a solid trading plan as well. Something good to definitely look forward to. So we're going to switch it a little bit over to some of our advanced traders that we have in the room, because we marketed this webinar for them as well. And, you know, Toya chime in too with some things, but these are some habits of a successful trader. What we find out, especially what we try to teach our students, is to have these habits. And as a trader, more psychology is in anything. When you're dealing with money, it's emotional. You get very emotional. So when trading, you have to learn how to control emotions. People always say, should I take the profits? Should I take the loss? Right? There's a balance between the two. And that's the thing about trading. If you don't know anything about yourself, trading is going to tell you exactly who you are, right? It's going to tell like exactly who you are. And it's coming to a point where even if you see, like, you ever watched this show on Showtime called Billions, they have an in-house psychiatrist in order to talk to you, because like Latoya is my psychiatrist and probably vice versa, because it's emotional. Latoya can laugh because it's emotional, because you have to make these decisions based off of the emotions of the market. But if you keep these habits together, it'll help you. So one things we got, number one, is what is my win-to-loss ratio in a given week? You have to treat trading like a business. You need to know yourself. You see in a lot of our videos, we primarily short the market. We saw the red dots because we know our ratio is better shorting than going long. But mindset-wise, it prevents us from going longer, buying stocks and going higher. But that's the thing, a battle we have to deal with. You need to have weekly goals. That's the thing. You can make a lot of money in the market. You can lose a lot of money. If you're trading part-time, right, or even trading full-time, what is your weekly goals? Do you want to make $500 a week? You have to look at that and learn how to stop trading, right? That's the thing. When you start trading, you can get overwhelmed and continue to trade, and you fail to realize I made my weekly goal. The same thing with swing trading, right? Or long term, you made your money, so exit out the market, reevaluate, and start all over again. You need to know, how often do I reach my weekly goals, or every month? That's as active traders. If you're not reaching your goals, right, that means that it's something off. That's like Latoya mentioned earlier. If we're not making profits after our third trade, I know for myself, and when Latoya and I trade, after the third trade, you have to question, maybe I'm not seeing something right. Maybe something's wrong. And that's the same thing when you're properly trained. You should know how to enter a trade, a high probability trade setup. So if you're constantly finding yourself losing on trades when you're an advanced trader, you need help. You need help because you're doing something wrong. Another question, how much do I lose when I have a bad trading week? And how many trades do I make in that trading week? So you already know personally, if you're losing a lot of money, you have to be making a lot of trades. If you're not, you're only making 3 trades, that means your share size is too much, is way too much. So the goal is capital management, advancement, and keeping the profits. So this next slide, Latoya, can you just talk about a little bit about the value of money and booking profits and share size, just a little bit for some of the advanced traders?
All right. So with this concept, it always goes back to your control. Definitely want to have control. So in order to advance, so let's say you're struggling now, you want to advance, you're a trader, you're an advanced trader, just do 100 shares. So you have to take some steps back, just do 100 shares. So every time you trade a stock, just do 100 shares. And that would give you a good measure of not only your strategy, but your risk as well. So if you could control your risk with a simple 100 shares and you're profitable, then let's say next month, now the next month you go to 200 shares. So that way you're continuously measuring your performance. A lot of people like to start big because that money aspect of trading, it gets to a lot of people. You could make $1,000 in minutes, but you could lose it just as fast. So constantly chasing the money and not really evaluating your risk, that's where a lot of people get into those road bumps. So if you don't care about the money, you manage the risk, and you trade just the trade, then more than likely you're going to be profitable and you're going to see advancement. So Ernest and I, we go back and forth all the time. Like, you have the money is like, all right, I have the profits, but I have a target. Do I take the profits or do I hold it to the target? Like, that's always like a back and forth thing between the two of us. So it's really just knowing like what are your goals from
Yeah,
there.
and that's the thing with trading. Sometimes you could lose a sense of devaluing money because you can get $100 so fast, right? Just using it, and then it's like, should I take it? I'm just giving that example. But you could be down $300 after you had the 100. So that's the concept, where if you have a system, and some people are very well and very good with that, they may just look for a daily goal and stop. It's hard not to look at the computer and not trade when you become an active trader. That's why we use the term, you have to book those profits. That means close out. You know, the more you book the profits as an advanced trader, the more you increase your buying power and the more you build up your confidence. Because when you take a major hit, you take a major hit. And that hurts as a trader because you have to build that confidence back up. So basically, we just don't want to devalue money and keep your risk to reward close. So this is basically the end of our webinar right here. So we like to open it up to any questions you may have. You know, we're all here. We have another one starting up soon. And we hope you enjoyed the webinar so far. So any questions, make sure you put it in the chat pane to all panelists. You know, you look in the chat pane, it'll say all panelists, and we can be able to answer those questions that you may have.
What percent of your capital do you risk in one single trade intraday swing? Percent of capital. What is your daily loss limit and the percent of your total capital after you stop trading for the day? And do you use any trading diary software or Excel, etc.? So percent of capital.
Well, when you have a percent of capital, see, what I like to keep it very simple myself. When you're trading, it varies with the stock. So if you're trading something like Apple, right, you know that that stock can go against you close to 1 point or so. 1 point. Like in our profit room, we look for, we always try to give you 1 point a day. So 1 point a day, 100 shares is $100. 500 shares is $500. 1,000 shares is $1,000, right? So we're at this stage where we don't necessarily look at the amount of capital we're actually putting up when we're day trading. I just know per trade, right? Since we are position size traders, we don't want to see it going against us a certain amount. So yeah, I don't want to lose no more than like maybe $200 or $300 per trade. Now that depends on the size of the trade as well. So like when you mentioned, you saw the red dots that we do have and the green dots, we add to the position. We build a position. That's more of an advanced technique. And we'll go to our website. We do track our trades, and I'll show you that in a second when we do that.
Now, yes. So I'm reading intraday. So that pretty much answers that question. Intraday. Swing trading is a little bit different because we always say 100 shares, 100 shares. That's a great concept to have because it really helps with that risk. So if you do 100 shares, let's say in a $50 stock, and that thing goes against you 50 cents, that's $50. But if that same $50 stock went up $1, you made $100. So that's a 2-to-1 risk reward. So no matter what we trade, intraday, which is a day trade, or swing trading, which is generally a few days to a few weeks, is that same risk in mind. Always willing to lose, like, let's say 100 to make 200 or to make $300, is that risk to reward, which is really important. So just to speak about, is really like depending on your capital or your account size, you should already, especially if you're a day trader, you should already have in your trading plan how much you can lose in a given day. And that will determine how much you're going to let go against you in a day trade per se. So hopefully that helps. And we use Excel to track our trades. So every trade is documented. So yes, Ernest and I do trade together, but sometimes there may be a stock he trades, I don't get in, or vice versa. We still will document that because you still have to know your personal trades and to be able to evaluate your progression. So for charts, we use Thinkorswim. We highly encourage Thinkorswim. They have the best charting software out there compared to any other broker. I heard, what's the other one? T3. I forgot that other charting software. I heard that's decent, but I still know a lot of people, they use TOS, Thinkorswim charts as well.
And Thinkorswim, for you guys anyway, is actually free. When you sign up, you can open up an account and it really works out, So the best thing you says here says it helps also limit my losses rather in terms of, So Thinkorswim helps a lot. And what that does, it allows you to practice. And that's more important with that. It allows you to practice. And we're going to go and I'm going to just show you something real quick that we do have. It's not available outside the US. But no matter what, once you learn how to read the candles, once you learn how to actually read the candles, it's not a big issue. You'll be able to understand how they work. Let me just close this out. So it's just one of those things where it's more important to get educated. It's really important to get educated because you don't know what platform you may be actually on, so that's the way we look at it. Thinkorswim for those in the US is definitely a good platform to actually use.
So how often do you alert the live future and Forex trading room? The live future and Forex trading room, it varies. They start at 6 a.m. in the morning. So I know that crude oil is very volatile, and they trade that a lot along with another currency pair via
They trade.
using futures as well.
So
So
6E, that's been popular. Euro been
yep.
very popular.
So they could do 6, 7 trades in the span of what, 2, 3 hours. That room is extremely active. So that's one thing. And don't forget, so it's what they close at 4 p.m. and they reopen at, I believe, 9 p.m. So it's more like a constant thing. Kind of hard to measure how many alerts because they trade a lot. So it's not only futures, it's forex as well. Do you guys use any types of indicators besides reading candles? So with the indicators, no, we do not use MACD or RSI. The only technical indicators we use per se is those moving averages. That's it. Because to understand indicators after price action, indicators are really delayed. But I know many traders do use indicators to help solidify or their, I guess, assumption of the direction of trend. So it kind of helps them out. But for us, we find that understanding the MAs and the price action and the candlestick formation, it keeps it that simple and it makes the chart looks cleaner and is much more easier to read. So hopefully that helps.
So, and then, yeah, exactly. You have a lot of noise in the market. You have a lot of noise, and we found that simple technicals really help out a lot.
So the leading indicators would be moving averages, correct?
Yeah, we'll use that, but I like when you see the charts like that, we like to use regular price action as well as the candlestick analysis. And that's why we always talk about education, support and resistance. Like I know somebody mentioned before about, when you determine whether to get stopped out of a trade. So there's levels, even though you see our videos that we produce, everything we do not get in the trade blindly, right? We get in it precise. We know our different levels of the market. We can anticipate where it's actually going to go. We know the price action, and that comes from time and skill, and that's what our students develop. So when you ask the question about getting stopped out, so there's like the risk reward. There's a feel in the market. So what happens when you have that feel in the market, it allows you to be able to do that. So what happens, you see something like that, you just add to the position, you feel comfortable, and then you close out the position. So you may have a resistance level here or resistance level there, and then you decide. So it's kind of, when we teach our private coaching students this, is just from the strategies that we actually give them, and it's the eye that they actually get. It's very hard to really explain it. It's just the feel of the market, and it's the seat time. So we show you where to look for it, how to look for it, and what to anticipate, because we've been doing this for a long time. So doing how many years you guys been trading for a living, and how long did it take you to become profitable? So I've been trading since the late 2008, and I started getting profitable, late 2008, early 2009. My background is more skilled. My father owned a company, and we did with like construction, air conditioning, and all that other stuff, right? I got involved with real estate, bought a lot of properties, still own them, but got involved with the market when the crash went lower. So I would say about 2012, 13, started taking the market even more seriously. Then started meeting individuals like Latoya, who's already been trading already. And we've been coming together, collaborating and making different strategies and putting our minds together in order to start, just trading is lonely. When you find somebody you can connect with and have a specific trading style, you link up. And that's what we've done. And between those times, even till now, we've come up with so many different strategies that we back test our own between swing trading and day trading. That's made us consistent. That's made us consistent with that. Uh, Latoya could chime in at any time if
Yeah,
she's
I've
noticing.
traded since 2007. So 2007, I started trading more in particular penny stocks. Kind of got away from that probably around 2009, 2010, and then I just started trading large caps and mid-size caps as well. I found it to be, you risk a little bit, the risk to reward is a little bit better. And what I mean by that, like with penny stocks, generally, because they move 10, 20 cents, you get a good run and they can really fly and give you that momentum you needed. But you need thousands of shares just to, make some decent 5, 6,000, whatever, and cap, or I should say profit. But however, when a penny stock goes against you and you have those same share size, you're losing a lot of money. So I found that the consistency was just kind of like, okay, you make 6K one day, you're down 3K. Or I just did not like it. I did not like that balance. So when I started trading large caps, I found it much more advantageous. So you can be down to $300 and cut it off, but you can still make your grand, your 2 grand, your 3 grand, but your loss is a little narrow because of how they move. So it's a little bit different. So the strategy that Ernest and I use, it's just consistent overall. So I would say from 2011 up until now, so that's about 6, 7 years of this strategy, just perfecting it over and over. So that's pretty much almost 10 years basically that I've been trading in the markets. And yeah, as Ernest said, along the way, we met each other and it was like, hey, you trade very similar to how I trade, so we connected, and that's pretty much how this came into existence, because it's an excellent strategy and it manages risk very effectively. So you can remain profitable in weeks, months, and years. So that's really the key.
So yeah, the different thing is somebody was mentioning about how does the live screen sharing work. So we use Thinkorswim, and we give you a watch list we're looking for today. We tell you when we're going to enter and exit. Our room is really for the trader that's home that wants to be able to be around professional traders. So we have newbies in the room who are limited, who come in the room and they want to learn, right? And they're limited in share size. Then we have some more advanced traders in the room that have a lot of capital. So it's kind of a disservice when you look at a lot of stuff online. It does take money to do what we do. We have some options traders in the room that can trade the options, either the weeklies or the bi-weeklies. And it's not a sense of desensitizing of money. It's just the reality of real trading, what goes on every single day. Like I used to trade with my trading coach years ago, and she was a female, and I would physically see her make 60, $120,000 within 3 hours. And I seen her lose $20,000, $30,000 in 20 minutes. But she's just a regular person like you and I. But what happens when you get on these social media platforms and things of that nature, they try to fool you and limit you to what you can possibly do. So that's why sometimes it's really hard to give us concrete numbers on certain things, because it's not that we're desensitized from the monetary aspect of trading. It's just like it just clicks with us. That's why we can add to the position. Boom, 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 add. Then we can start exiting the position. Very advanced, because a lot of traders do not do that. But like Latoya said, Latoya has so many years in the market, and myself and what we see, what other traders see, our futures traders, they see the same exact thing, and thus allows them to pull money out of the market. And that's what we provide with our services, because we make our money trading. That's it. That's why it's not just, it's a group of us, and we want to see people not get fooled by the smoke and mirrors. And that's what we notice a lot. That's why we only make the live day trades, not to brag or anything. It's just like, if you're paying somebody for a service or providing something, why can't you show them where you got in and got out of the market? So for somebody to mention before, this is our P&L statement. Before this, we put our entries and exits from our room. So this is just basically if you did 100 shares, 300, 500, 1,000, or 2,000. Now this is just on consistency. That's the
Correct.
thing with trading. There'll be days where you can lose money. You can lose money, but the name of the game is being consistent.
So basically what this tracks really is, say, for the full month of September, if you traded every alert we provided, win or lose, with just 100 shares. So you got an Apple on Monday with 100 shares, you got in something else 100 shares, that's it. The next day you did the same thing, 100 shares, 100 shares for the whole month. The whole month, because we already ended September, you should be up $2,000, basically $2,000 just for that month. So if you traded 300 shares consistently for the month, that just shows you what you should be up. So we're tracking it by share size, and with the assumption that you're not adding, you're not, one day you're doing 500 shares and then the next you're only doing 100. That's being inconsistent. The key is you want to measure your consistency by trading the same amount of share size every month. So once you're consistent, the next month you add to that, meaning you go up in share size and you repeat the entire process. Someone asked about the Profit Room strategy course. Yes, it covers the entire strategy from top to bottom. And it's not just like a visual thing. It's explanation, is the theory, is everything behind it, how you should analyze that daily chart. Like you got to know where that chart is, where that stock is when it opens, and be able to assume exactly what it's going to do. So we cover that in full.
But the profit course is different.
Definitely different, because that covers A to B. It covers from, if you don't know anything about candlesticks, you're going to learn what candlesticks are. You're going to learn support and resistance. You're going to learn your forex, your futures. You're going to learn how to trade penny stocks if you want to or not. You're going to learn about low floats. That thing covers everything from top to bottom, as well as the strategy course, because we want like well-rounded, so the person can decide, like, you know what, I don't like large caps, I love the penny stock market, so let me trade that.
Mm-hmm.
So that's what we have in there for that.
Yeah, and it's true, because then, like somebody, you come into the room, we trade the same way, but the day trading for profits is so much more, where if you want to trade in the afternoon, like people in our room, we trade the channels, and we trade what they call tweezers, like reversal patterns, different things like that. So the strategy is great. You can learn the strategy. That's one particular thing, and there's nothing wrong with doing that if that's what you want. But the day trading for profits course, if you want that link, we can send you that link for that. That just encompasses everything about day trading in general: risk management, money management, trading plan, some trading psychology, things like that. You get a little bit more mentoring with that, But if you already feel that you are a successful trader already, and you're just looking for something, just a little bit of an extra bonus or something like that involved with trading, you could possibly take that course. There's no problem with that. So somebody mentioned, yeah, that's our futures team. They just go under a different name at Futures, Forex, and Profits. They were on a webinar earlier. They couldn't make it here, but that's the service we provide. And one thing we wanted to mention, this is strictly for beginners. We're going to have a course here October 14th. We're going to add some more light to this. It's only $97. And this is really something for anybody who is new. We're going to go over the Thinkorswim platform. We're going to show you where to look for stocks to trade, right? Different sectors, how to set yourself up to start trading, even if you don't have money. Even if you don't have money, you know, because people play video games all the time, right? Trading is the same way. Or why don't you spend your time looking at charts and things of that nature? So this is going to be really a beginner way to navigate you through get in Thinkorswim. So if you plan on joining the webinar, get Thinkorswim. Then we're going to show you where we scan or where you can look for stocks, right? Which ones you may want to put in a basket to keep. So when the market opens up on Monday or Tuesday, right, you can decide how to simulate. You don't even need real money, and test out how you would trade in the market. Get you up and running and get your feet wet so you could say, listen, even though I'm in a simulated account, I'm still a participant in the market. Then if you feel like, you know what, I like the Thinkorswim aspect, you can download it on your phone. I'm scanning for stocks. Now I want to know, I want to take it to the next level. Then you could decide if you want to take one of the Profit Rooms courses, or if you want to get educated somewhere else. But we're going to leave you with something solid to get you started on what you need to do so you can understand everything about the market, so you can at least start, you know, walking and feel what's going on. So that's what we have coming up. We'll email you out the link. You can trade mobile on Thinkorswim. Yes, our platforms, we trade off direct access. So we don't have mobile, but Thinkorswim, our futures traders, that's all they use is Thinkorswim. We have Thinkorswim as well. And we trade off of Thinkorswim with, futures. So we got one of our futures traders that jumped on real quick. Jason, you want to mention something real quick about the futures market in the room?
Yeah, sure. Pretty much what you do in the futures room is trade futures. What are futures? Futures are more like, I guess, trying to explain what wheat, grains, pork bellies, oil, things like that, all the things that people need on a day-to-day basis. And the futures is what we trade are pretty much based on the future contract price, what those will be settled as. We pretty much on from 7 a.m. to about 4:30, 5 o'clock p.m. And then we do a small window segment from about 9 to about 11. And so pretty much that is it. We make a lot of calls. I don't know if you follow us on Instagram. Pretty much you make a lot of calls starting at about 7. And then hopefully we watch those move through the night. A lot of times I know that everyone is not on when a lot of those things move, but we try to give you a good idea of what's going to happen before we close the room for that night.
Yes. So that's basically it. And, you know, we try to integrate the Slack app. We're going to be starting to use that a little bit for those who can't be on all the time. And, of course, like you see here is low margin requirements as well. But that's the whole key behind next week. I mean, on the 15th, on the 14th, we're going to go over the Thinkorswim platform and show you how you could do a lot of things with that. So that's why it's the backlink value. But any other questions that you may have, ask, you know, just send us an email. We can answer those questions for you. And that's the whole thing about the Profit Room. We're going to have more webinars coming up soon on education. And remember, you want to be around people that actively trade for a living. In all these markets that you see, that's what we do. And you don't have to trade for a living to participate. There's many hours of the day. So when you're in the comfort of your home, you want to open up Thinkorswim on your phone, or if you want to, you know, look at on your charts on your computer, you definitely could benefit and capitalize on the market. That's what we do. That's what we do every single day, and we enjoy doing that. So, so I don't know if there's any other questions you guys may have, because we're gonna wrap it up.
He's asking Jason. So Jason, if you can briefly just, I think the question was, how many alerts are given, like even during like the course when the room is open, the Futures Forex room is open.
Yeah, sure. Mainly, I guess if they follow the IG page, they give 4 directional calls a night, pretty much just trying to help people give an idea which way that those 4 instruments are going, which is pretty much the Euro USD, uh, crude, copper, and nat gas. Based on that direction and how setups go, I probably provide about 2 or 3 setups a night. Normally, what I'll also do is try to give you the direction and pretty much where I'm looking to see where it may pull back overall. There's 2 other guys in there that also give out calls, so probably looking at sometimes our calls are the same, sometimes what we see are different based on the different styles of trading that we have. So you could probably see anywhere between roughly between 6 to 8 calls in the nighttime session. During daytime session, there's definitely more than that.
Thank you.
Yeah, and that's the thing is that, you know, when you get different calls and you see that they work out pretty well. Like I'm in a short position now that who called out the short position in copper? Was it you or Greg?
That was probably Greg because I called the long into Friday night and he pretty much
Yeah.
there hit it and then from there it reversed down pretty hard. And so I know Greg is also holding a short position over from the night. I'm looking probably gap down. I think because the way it kind of closed, it probably gap down and turn around because again I think the overall direction is long, but for right now because it ran up and touched that 4-hour zone, it retraced pretty hard.
So this is an example. I've been doing, if you follow us on IG and you follow us on Facebook, we just been showing how you can do it with one contract of HG. So I'm not an active futures trader all the time. I even actually rely on Jason and them with the actual knowledge that they have is actually there. I trade technicals. Latoya and I, we swing trade a lot futures, but intraday day trading, we love equities and stocks. So if you look at something like this, HG only have one contract of HG, and I'm holding it short. But this is the thing which you can get from, but you know, just like futures, the requirements for HG right here is about $3,500 in order to do it. So the thing is, it's just like trading. If you have some form of experience in trading, you know, the futures room can work out great for you. And that's the key behind it. You want to have some experience in trading. You have to have your own responsibility behind it as well, because that's the same thing we do in our day trading room. We give guidance. That's why I always give a disclaimer before anything that, you know, education is the first and foremost thing behind trading. Invest in your education first. Play around with the simulator, get used to the movements. Then once you be able to come in the room or you want to use us for education, we can help you out at that particular time. But you see that one little trade that we can make an HG or the small trades, those who are in the room, you see stuff like that. It's only $149, right? You do both rooms is $219. So we always use the term believe what you see, not what others say, because this is what we do every single day. And like Latoya mentioned on our Excel spreadsheet, when you look at the spreadsheet and those who are in the room, they know the trades that we take. We post our stops and everything like that. So some days we get hit, some days we don't, but we try to minimize that loss. That's the more important thing behind it. So like it was mentioned before, come join this. It's only $97. If you know somebody, we'll send you out email. You can forward it to someone. And this is for people for all levels, because some people think they know how to trade, They honestly do. They think they know how to scan for stocks, but they may not know how to. And this is what we want to show you how to get you up and running. Then you get familiar with the Thinkorswim platform, and you get used to how to use the mobile. And before you know it, boom, you might want to purchase a course. You might want to join one of the rooms and just start actively making some money. And that's what we're here to show you how to do.
So we hope everyone had a great time on this webinar. More importantly, we hope you learned something new. So you learned something new, or you got answers to the questions you may have had. So that's very, very important. So any other questions or future questions, feel free to email any one of us, and enjoy the rest of your weekend. So Monday, we'll be back at it again. So have a great weekend, and thank you everyone for your participation.
Yeah, so the team, everybody like to thank you. Even though we couldn't, Jason is here representing the futures. There's also Rig, and there's also Greg that's on there as well. And we have a little admin named Nathan. He couldn't be on here, but you know, Latoya and I, everybody appreciates the support. If you're not following, go to futures, Forex and Profits, futures _ Forex _ Profits. We tag them all the time in the profit rooms. Instagram, please follow us with that, you know,
Or
because
even
that
on
gives
Facebook. Yep.
Facebook, because the support is there, you know, just, you know, send our links. Also subscribe to the site as well. And like this webinar here was free. We plan on doing many more down the line. So the more you're connected, the better. So we have ones down the line. Hopefully we get more with the futures and associate more, because you want to be associated with active traders. So we thank you for being a part of the group, and we thank you for the support of the Instagram as well. And we'll look forward to seeing you guys soon in the profit room. All right. Take care, everyone.
Thank you.
Have a nice day. Have a nice weekend.